A bull market is like sex. It feels best just before it ends. Warren Buffett is saying that the best returns in a bull market often come right before it turns into a bear market, just as the most intense pleasure in a sexual encounter often comes right before it ends. To understand this quote better, it is essential to understand the concepts of bull and bear markets. A bull market refers to a sustained rise in stock prices over a period, often accompanied by investor optimism, confidence, and high trading volumes. A bear market, on the other hand, is characterized by declining prices, investor pessimism, and a general feeling of negativity about the economy's future. In bull markets, investors are typically enjoying strong returns on their investments and feel confident about the future. However, as the market continues to rise, it becomes increasingly difficult to find undervalued stocks and securities, and investors may become complacent or even overconfident. This is the point where the market is at its peak, and it feels the best for investors just before it starts to turn. Buffett's quote implies that investors should be wary of the temptation to stay invested in the market when it is at its peak, as it is easy to get carried away and ignore warning signs of an impending downturn. Just like how sexual pleasure can be addictive and cloud one's judgment, investors may become addicted to the good feeling of making money in a bull market and ignore the risks of a downturn. The quote also suggests that it is essential to have a long-term perspective and avoid making investment decisions based solely on short-term market trends. While it can be tempting to ride the wave of a bull market, investors must consider the possibility that it will end soon and take appropriate precautions to protect their investments. By contrast, a bear market can present excellent opportunities for long-term investors who are willing to be patient and wait for the market to recover. In conclusion, Warren Buffett's quote is a memorable and colorful way to illustrate the dangers of investing in the stock market solely based on short-term gains. It reminds investors to have a long-term perspective and avoid becoming complacent or overconfident during market cycles. As with any investment, it is essential to do your research, make informed decisions, and be prepared to weather any market conditions that may arise.